Hello, I'm Angeline Ong, and welcome to Beat the Street, the show that gives you all the tradable news and data you need ahead of the Wall Street Open. Now, coming up, CPI on deck. Wall Street's solid September rally facing its biggest test as investors' eye changes in core inflation pressures that could change the Fed's rate path. Yen Watch, we're doing that for you as well because Japan's currency is teetering as that US CPI figure looms. And on the retail front, Home Depot profits beat the street. Plus, third quarter sales, that fall was smaller than expected. So plenty on our plate. Welcome to Beat the Street, this new edition of Beat the Street, might I add, here on IG. Not long now before Wall Street starts trading, just getting those CPI figures, those key numbers just trickling through now. In terms of the figure for the year-on-year figure for October, we were waiting on 3.3%, and the figure came in slightly less than expected, 3.2%. Core CPI year-on-year, well, that was almost bang in line with expectations. Looking out for 4.1%, we got 4%. Just checking in on the markets now to see if there's any reaction in terms of the Wall Street, which mirrors the Dow Jones Industrials. We're seeing a slight tick up there. Let's have a look at the hourly, or rather, let's even look at the tick for you. It's ticking up ever so slightly, as I can show you there, but it is very, very volatile. Let's have a look at the volatility index for you on an hourly view. Volatility, as you can see there, slipping that red bar there down to 15.25. Prior to that number, it's 15.75. Let's cross live to our chief market analyst, Chris Beecham, now to get a sense of what he thinks of that number. Chris, what's your early reading?
Well, this is spot on what markets were hoping for. All four metrics, the year-on-year and month-on-month figures for headline and core, below forecasts, really. The year-on-year figure down 3.2 to 3.3. Core, we were just a slight another improvement on that front as well. Core was 4 rather than 4.1. So price is moving in the right direction, and you've got the dollar in full retreat now. You've got euro dollar. You can see this chart. This is a 2-minute chart here, but you are up some 50 points from just before the meeting. If we flip to where we are with stocks, really, that's the other key indication. There we are, the S&P rallying some 55 points in the moment after the release. Markets are very pleased to see this. Investors certainly are. It shows inflation is moving in the right direction. The Fed, as we know, has been keen to stress that the bar for another rate hike is very high, and certainly today's inflation print allays fears maybe that we might have got one more rate hike snuck in before the end of the year, and really I think confirms the thesis that the Fed is done with hiking rates for the time being, and that they will leave policy unchanged for the foreseeable future.
Thanks very much, Chris. I'm sure we'll be checking in on that with you before the Fed's next meeting. Just want to say that I've just checked the CME Fed Watch tool market, still pricing in more than an 80% probability that Fed will stand pat on policy at that December meeting, but that might change throughout the session given the numbers that we've just had. However, I want to get your attention to this chart right now because we're seeing quite a move on the dollar versus the yen as well. Look at that minute chart there showing you that move prior to that CPI figure. We had yen versus dollar at around 15167. That's not now down at 15124. Very interesting moves there. Of course, it's the 152 level that most analysts and also the markets, the traders are looking out for, because that is kind of the key intervention zone. Big news out of US retail too. Home Depot out with third quarter numbers. Let's take a look at the animation here for you to show you the details. It had a smaller than expected fall in third quarter same-store sales. Now, this is interesting because Home Depot was seen suffering from the cost of living crisis there, and also high inflation and high fuel prices that have hit Americans hard. Although they've been relatively resilient, cracks are beginning to show. Home Depot's profits came in at $3.81 a share. That was slightly better than expected. And everyone's now turning their attention to rival low, which reports on November 21st. But Home Depot, just showing you the shares here, This is the minute chart, but let's take a look at the daily chart for you, because this is all sessions on the IG platform, so you can trade right now without having to wait for the main markets, and it's up almost 8% after those figures, which were less bad than analysts had expected. This, as I mentioned, a really big week, so those earnings from Home Depot come as we wait on Walmart. Are also seen reporting a 4.5% rise in quarterly revenue when it reports later this week. Just showing you Walmart shares, which is also all sessions there. It has been climbing higher since that October mark there. If you look at my trend line there, and if this trend line continues, we could see its shares converging at the 17,500 level. Macy's also another one that's on our radar because it's seen reporting a fall in third quarter sales on Thursday as consumer spending remains choppy and credit card revenues soften. And Gap is another big one to watch out for, indicator of the health of the high street as well. Gap seen reporting a fall in third quarter sales due to slowing demand for outdated clothing and footwear as customers look to newer styles. The company trying to bear up in the face of fierce competition from Shein and Amazon. And last but not least, TJX is another one that you can trade on the IG platform, seen reporting a rise in Q3 sales on Wednesday as strong demand from inflation hit customers meant that it continues to do well because of its deals and bargains. Now, turning to the air, we've got Boeing in sight because it's likely to update on 737 deliveries for October after widening the scope of inspections needed to correct an issue. Boeing, I want to show you the shares because quite recently, Boeing shares, which are all sessions, did tick higher, as you can see there, after it said on Monday that China was considering ending its freeze on purchases of the plane maker's 737 MAX aircraft after more than 4 years. The company also got a lift, much like the sector, after news that Middle Eastern Airlines at the Dubai Air Show placed bumper jet orders, which lifted its shares along with supplier Spirit Aerosystems. Now, Tencent Music Entertainment, that's a key one to look out for because Q3 sales fell to around $901 million. The company also saw its social entertainment services fall a near 50%. This is revenues, nearly 50% due to the crackdown by Beijing on online gambling. Now, Tencent is very interesting because it is seen as a bellwether of this space, and also the mood music, which is changing in Beijing on gambling, which has been seen as a growth sector for companies like Tencent, is also fascinating given that many other companies were hoping to launch in the Chinese market. Net profit attributable to equity holders of Tencent rose to 1.7 billion yuan from just over 1 billion yuan a year earlier. Now, interested in vaping products and companies? Well, what's interesting about this space is that vaping products, which began as part of the anti-tobacco movement, was initially intended to be the safer choice than cigarettes. But very swiftly, that mood music changed. Regulators found that those using vapes still took on a lot of nicotine and sometimes in bigger doses, given you can vape virtually anywhere. Vaping, regulators say, should not be deemed completely safe. And I just want to tell you that there's also been a crackdown on vapes marketed in candy-colored boxes. Regulators say this kind of packaging can lure children under 18 to vape. There's also talk of a ban on disposable one-use vaping products, seen as an environmental disaster. Back in October, British American Tobacco, just bringing up the shares here for you, it actually was dealt a blow because its shares sank after the US blocked the sale of 6 flavors of the company's main vape brand, and this included the menthol flavor, which it sees a huge proportion of its sales. BAT makes Dunhill. Imperial Brands also reacted to that news. Imperial, of course, is listed here in the UK. Imperial Brands is a peer rival. Their product Blue is what underpins their NGP, next generation products. But whatever you want to call them, heated tobacco, vape, tobacco-free, oral nicotine pouches, well, the mood music for NGPs is souring as well. So with this mixed outlook, with the regulatory mood music souring, where should you go with big tobacco and NGP makers? Well, it's important to understand that they are still cash generative and they have high dividends. And this may mean that investors will have to weigh that against the regulatory risks. Imperial has just raised its annual dividend by 4%. Now, before we go, just a last look at how the markets are looking for you. We had those CPI figures out earlier, and the CPI figure we were looking out for 4.4, I believe was the figure, 4.1 rather, and we got 4%. This is for the core CPI, and in terms of the core CPI year on year for October, we were expecting 3.3%. It was slightly softer than that, 3.2% for October. Not a huge amount of reaction on Wall Street, but I want to show you the yen versus the dollar, because that seems to be where, if you look at the minute chart, where the reaction is. Take a look at that red bar, and it's still heading lower. So that's the latest on Beat the Street. For more analysis, do join me every day at 13:30 for the look ahead to the US Open. And we'll be joined by Jeremy Naylor at 7:30, and he'll be doing the same for the European Market Open. Until then, do tune in to @IGCom or @Angeline Ong on Twitter. This is IGTV.